Listen up, investors. We're diving deep into the world of consumer giants, the titans that shape our everyday choices and dominate the market. First up, the undisputed king of beverages, Coca-Cola, followed by its ever-present rival, the snack and soda powerhouse, PepsiCo, and rounding out our trio, the Swiss multinational food and beverage conglomerate, Nestlé. These aren't just companies churning out products, they're sprawling global empires, meticulously built on understanding and satisfying your every craving, from the mundane to the indulgent. From that ice-cold Coke on a scorching summer day, a simple pleasure that transcends borders, to the salty crunch of LA's chips during the nail-biting moments of the big game, a shared experience for millions, to the satisfying snap of a Kit Kat bar, a moment of sweet escape in a busy day. These brands have seamlessly woven themselves into the fabric of our daily lives, becoming almost indispensable. Their reach is truly staggering, a testament to their marketing prowess and operational efficiency, touching the lives of billions of consumers worldwide, across every continent and culture. They've weathered the storms of wars, navigated the treacherous waters of recessions, and adapted to the ever-shifting landscape of diet fads and health trends, proving their resilience and adaptability. They've achieved this longevity because, at their core, they sell simple pleasures, moments of joy and comfort that people crave. But as savvy investors, we can't just be swayed by catchy slogans and nostalgic feelings. We need to peel back the layers of marketing and branding to look deeper, to analyze the fundamentals and assess the true value beneath the surface. We need to move beyond simply asking ourselves which soda we personally prefer. Is it the undisputed beverage king, Coca-Cola, with its iconic brand and global distribution network? Or is it the diversified snack and soda powerhouse, PepsiCo, with its impressive portfolio of brands and strong market presence? Or perhaps the Swiss titan, Nestlé, a global food and beverage behemoth with a vast and diverse range of products? Each of these companies boasts a unique history, a distinct corporate culture, and a compelling reason why it might deserve a place in your investment portfolio. We'll meticulously break down their financial performance, examining key metrics and analyzing their recent earnings reports, scrutinize their dividend payouts and assess their commitment to returning value to shareholders, evaluate their growth prospects and identify potential avenues for future revenue expansion, and carefully analyze the potential risks and challenges that could impact their future performance. By the end of this comprehensive analysis, you'll have the knowledge and insights you need to make an informed decision about which of these consumer giants deserves your hard-earned cash. We're on a mission to uncover profit-generating opportunities, and these three industry leaders are strategically positioned right in the sweet spot of consumer demand. So, grab your favorite drink, maybe even a Coke, a Pepsi, or an Nespresso, settle into a comfortable chair and prepare to dive deep into the world of consumer staples, and let's embark on this journey to pick a winner. Alright, let's dive into the heart of the matter. Let's get to the numbers, the metrics that truly define these industry titans. We're going to dissect their performance, analyze their strengths, and ultimately, see how they stack up against each other in the grand scheme of the market. So the burning question, who's been delivering the goods? Who has truly been rewarding their shareholders and demonstrating consistent growth in this competitive landscape? Let's find out. First up, we have Coca-Cola, KO. It is the quintessential steady blue chip, a name synonymous with stability and delivering consistent returns year after year. It's a stock you can often rely on for slow and steady growth. Then there's PepsiCo, Pep, which arguably has more horsepower under the hood, thanks in large part to its booming and ever-expanding snack division. This diversification gives it an edge in the market. And finally we have Nestlé, NSRGY, a true global giant in the food and beverage industry, with a market capitalization that dwarfs the others. Its sheer size and scale are a testament to its enduring power. Now, if we look back over the last 5 years, we can see that PepsiCo has often edged out Coke in terms of total return, showcasing the strength of its diversified portfolio and strategic investments. Meanwhile, Nestlé's unparalleled global reach and its portfolio of premium brands continue to keep it strong, even amidst fluctuating market conditions and evolving consumer preferences. When it comes to revenue, Coke pulls in a substantial $45 billion annually, a figure that reflects its enduring brand loyalty and consistent demand for its iconic beverages. PepsiCo, however, boasts over $90 billion in revenue, a testament to the power of its snack division and the success of its diversified business model, which extends far beyond just beverages. And then there's Nestlé, which generates nearly $100 billion in revenue, solidifying its position as the largest food company in the world and a true force to be reckoned with. In terms of brand strength, all three companies are undoubtedly top tier, but they each excel in different ways, appealing to different consumer segments and leveraging different marketing strategies. Coca-Cola, for example, is virtually synonymous with happiness, successfully associating its brand with positive emotions and creating a powerful connection with consumers worldwide. Meanwhile, Pepsi's snack brands have become cultural icons in their own right, deeply embedded in popular culture and representing a diverse range of tastes and preferences. And Nestlé? Well, it's more like a house of brands encompassing a vast portfolio of well-known and trusted names like Kit Kat, Nescafé, and Purina, each with its own distinct identity and loyal following. Each of these companies has a competitive moat, a protective barrier that helps them defend their market share. But these moats are built differently, reflecting their unique strengths and strategies. Coke's moat is its unwavering focus and stable business model, allowing it to maintain consistent profitability and brand recognition over the long term. PepsiCo's moat lies in its diversification and dynamic approach to business growth, enabling it to adapt to changing consumer trends and capitalize on emerging opportunities across multiple segments. And Nestlé's moat? It's its position as the ultimate global powerhouse, a worldwide food company with an unparalleled international presence and a vast network of resources. So with all these factors in mind, let's delve deeper and see what truly makes each of these companies tick, exploring the fundamental drivers of their success and the key elements that set them apart. For billions of people around the globe, across countless cultures and generations, Coca-Cola is not just a beverage. It's a cultural icon, the first name that springs to mind when you think of global brands. It's a name synonymous with refreshment, a ubiquitous presence in every corner of the world. So, what's their secret? What's the winning formula behind this unparalleled success? Their strategy? It's remarkably simple, yet incredibly effective. Focus relentlessly on beverages and strive to be the absolute best at it. No distractions, no diluting their efforts, just a laser-like focus on delivering the highest quality drinks to the world. From the timeless classic Coke, to the crisp, refreshing taste of Sprite, the vibrant and fruity flavors of Fanta, and a constantly expanding lineup of bottled waters and invigorating teas, catering to diverse tastes and preferences, their unwavering focus on the beverage industry is undeniably their greatest strength, allowing them to dominate the market and maintain their leadership position. But their true secret weapon, the engine that drives their global dominance, is a world-class distribution system, a logistical marvel that spans continents and ensures their products are always within reach. And underpinning it all is an asset-light franchise model, a brilliant financial structure that essentially prints cash, generating consistent revenue streams with minimal capital investment. This ingenious model delivers massive free cash flow and unparalleled financial stability, allowing them to weather economic storms and consistently reward their shareholders. It's no surprise, then, that Coca-Cola is a dividend aristocrat, boasting an incredible track record of over 60 consecutive years of dividend increases, a testament to their enduring profitability and commitment to returning value to investors. In a volatile and unpredictable world where economic uncertainty looms large, KO provides a safe harbor, acting as a reliable anchor for any investment portfolio, offering stability and peace of mind amidst market turbulence. It's important to understand that this isn't a get-rich-quick stock promising overnight riches. Rather, it's a get-rich-for-sure stock, a long-term wealth-building machine for patient investors who understand the power of compounding and consistent growth. While they're strategically diversifying into the rapidly growing markets of coffee and sports drinks, expanding their reach and appealing to new consumer segments, at its core, when you invest in Coca-Cola, you're buying the undisputed king of the beverage industry, a company with a legacy of success and a future brimming with potential. For conservative investors who prioritize income generation and seek long-term financial stability, Coke is more than just a stock. It's a financial fortress, a bastion of strength and resilience in an ever-changing world. Ultimately, you're placing your bet on one of the most powerful and recognizable brands in the history of commerce, a brand that has stood the test of time and continues to resonate with consumers worldwide. So raise a glass to the enduring legacy of Coca-Cola. Long live the king! But the beverage landscape is constantly evolving, with new players emerging and consumer preferences shifting. Let's take a closer look and see how the challengers stack up against this iconic brand. Don't call PepsiCo just a soda company. Yes, they have Pepsi, Mountain Dew, and Gatorade, but the real magic is Frito-Lay. LA's, Doritos, Cheetos, these are cultural icons and cash machines. PepsiCo's strategy is winning with purpose, synergy between snacks and drinks. When you buy drinks for a party, you grab chips too. PepsiCo owns the whole occasion. Their massive portfolio gives them huge leverage with retailers. For investors, PepsiCo means growth and diversification. The snack business is a separate growth engine, less vulnerable to health trends than sodas. You get a solid, growing dividend and a company firing on all cylinders. They're innovating with healthier snacks and expanding Quaker Oats. PepsiCo is dynamic, aggressive, and knows how to win. Owning PepsiCo is like betting on two champions at once. That's a winning proposition. Meet Nestlé, the quiet, diversified Swiss giant. This isn't just food and beverage, it's health, nutrition, and wellness. Nescafé, Kit Kat, Häagen-Dazs, Gerber, Perrier, Purina. The list is endless. Nestlé's focus is premiumization and science, selling high-value, high-margin products. Nespresso is luxury coffee. Purina is premium pet nutrition. Their R&D drives innovation and pricing power. For investors, Nestlé offers unparalleled diversification and exposure to booming categories like pet care and health science. Their global reach balances growth and stability. This is for long-term investors seeking steady dividends and exposure to powerful trends. Buying Nestlé is like owning a curated ETF of the world's best consumer brands. It's a fortress for any serious portfolio. Let's talk dividends. These giants pay you to own them. Coca-Cola is a dividend king over 60 years of increases, with a yield around 3%. For income investors, that's gold. PepsiCo is also a dividend king with a slightly lower yield but faster growth. You trade a bit of yield for more dividend growth over time. Nestlé's dividend is strong and reliable, usually between Cokes and Pepsis, but paid in Swiss francs. Great for diversification. Currency can affect your payout, but the Swiss franc is a strong currency. So, who wins? Coke for highest yield and stability. PepsiCo for growth. Nestlé for global diversification. All three are shareholder-friendly and reward owners. Pick your flavor, income growth, or global reach. You can't go wrong with any of them. Let's look at the risks. Time for a reality check. Every company faces risks. Coca-Cola's biggest threat? The war on sugar and shifting health trends. They're diversifying but still rely on sugary drinks. PepsiCo faces similar health pressures, plus the complexity of managing snacks and drinks worldwide. Their snack business could face backlash against processed foods. Competition is fierce and they must stay agile. Nestlé's size is both strength and weakness. It can be slow to pivot. ESG concerns and global scrutiny are real risks. Managing hundreds of brands across the globe is a huge challenge. All three face rising costs, supply chain disruptions, and inflation. None are risk-free. Know the headwinds before you invest. Understanding risks is as important as knowing their strengths. Let's see who's best prepared for the future. In consumer goods, innovate or die. Coca-Cola is catching up, buying Costa Coffee, investing in body armor, and launching craft sodas. PepsiCo is a master of snack innovation and pushing zero-sugar drinks. Their data-driven approach and PepsiCo Labs keep them ahead. Nestlé is betting big on health science, plant-based foods, and premium coffee. Their R&D is deep and long-term. PepsiCo leads in near-term, market-driven innovation. Nestlé is the long-term, science-based innovator. Coca-Cola is the comeback kid, adapting fast. All three are investing to stay on top for decades to come. But who's the best pick right now? The moment of truth. Who's the champion for your money? For conservative investors craving income and stability, Coca-Cola is king. Rock-solid yield, iconic brand, and a cash flow machine. For global-minded long-term investors, Nestlé is a fortress, unmatched diversification, powerful trends, and Swiss precision. But if I have to pick one for the best blend of growth, income, and stability, my money's on PepsiCo. You get a growing dividend, a strong beverage lineup, and the Frito-Lay juggernaut. That diversification gives you an edge, safety and growth in one package. PepsiCo is the perfect blend of offense and defense. It's the stock with more ways to win. In this market, that's what I want. PepsiCo is my champion, but remember, all three are world-class. Choose the one that fits your goals, and enjoy the ride. Thanks for watching.